So today we're going to talk about Tesla stock, right? What's going to make it jump? What's going to make it have its repricing? The common trope that we've been hearing from everybody is based on earnings. You got to see earnings growth. And then what's been happening, of course, is that the 2024 earnings right now is pretty flat. It's going to be expected around $2.60. That's the general fiscal year 24 adjusted earnings per share, down from 270. That's what Gary Black did. The Wall Street adjusted earnings per share is 284. And then, of course, it's next year, 2025, and it ranges all the way from $3, $5. But at the end of the day, the earnings per share is people are not baking in what might happen with anything else other than auto sales, and some are not even adding in energy sales. So what I thought I'd do is bring in Justin, also known as Lord Pretty Flacco. We just did a fantastic interview with him. Check out my YouTube channel, interviewed him, and he did a deep dive full of reports on the potential for robotaxi. But one of these great tables that he brought to the table here was this, what he calls the great repricing. This is a moment when Tesla investors finally recognize Tesla for not only robotaxi, but maybe even bot and others. And he listed out a number of catalysts and he put some dates to it. So let's introduce you, Justin. Why don't you explain a little bit of your philosophy of the potential great repricing that you dubbed, and then also some of these catalysts?
Yeah, sure. Thanks. Yeah, I hope you guys checked out the interview. It'll probably go into more detail. I'm just going to try to rehash maybe some of the key points here. But so, what I typically do is I try to overlay, right, my understanding of the fundamentals of the business, right, and determining the intrinsic value of new business lines that do not exist yet, such as robotaxis and eventually Optimus, et cetera. Because, right, the only main source of arbitrage that we have as retail investors is the ability to invest over long periods of time and not have to wait for financial data to show up on the income statement for us to begin to price in, right, the valuation of these future cash flows. So my take on the great repricing is when I look at the charts, right, everyone's seen it. There's a multi-year downtrend line that's pretty clear, right? It's banged up against it maybe like 8, 9, 10 times since the beginning of this rate hike cycle, right? Back in early 2022 or whatever. So for the past couple of years, it's been a pretty strong downtrend line. My perspective is that once we break through that, it will be the mark of what I'm referring to as the great repricing. And for those who were around in the 2019, 2020 era, right, where we had an insane rally that took place over the course of like 18, 24 months, the hardest part was holding on during that rally. That's why you don't see a lot of people who can, who are able to brag that, they made, a 10x return on Tesla, right? Most of us bought in either during that rally or after that rally during this downtrend for the past couple of years, right? And we're still waiting for that next wave, which is fine. That's totally fine. When you look at the chart, even Elon commented on this recently, right? With the longer the base, the bigger the breakout, whatever it is. We're going to see the same thing happen, as we've seen with Meta and NVIDIA during this cycle. If you look at the charts with NVIDIA and Meta, they had brutal downtrend line during this rate hiking cycle, as many of you may have remembered. Meta specifically made Jim Cramer cry on television for being wrong on the stock, right? That was the day of the bottom for Meta. And it went on to proceed to rip something to the tune of like 200-300%, or maybe even more. So when you look at Tesla, something similar is going to happen to the stock. So technical analysis aside, right? If we just look at the fundamentals, my perspective, right, is a little bit different than maybe what you might have heard from others, which is I believe that there's a very high discount rate being applied to these future lines of businesses such as Optimus and robotaxis, such that we get very little credit shown up in the stock relative to its true intrinsic value discounted to today's valuation, today's dollar. My model suggests something to the tune of at least $200 to $300 in today's value should be attributed solely to robotaxis if there was a decent discount rate being applied. And discount rates, you can think of it as like kind of like the inverse of confidence levels, right? So when confidence is low, discount rate goes high. And that means that when you plug it into your valuation model and you're modeling out to 2030, 2035, those outer years matter less and less as a result of the discount rate, right? So, my perspective is that the discount rates that are being applied will decrease based on some catalyst that's going to happen that's going to spark this whole thing and give much more confidence to the market, to investors, to institutional investors. You have to think about the perspective of the incremental buyer. The rest of us, who are bullish on Tesla, we already bought the dip, right? It was 40% year to date dip. We're already all in. So now you have to think about who's the incremental buyer. And obviously, we're talking about whales, right? We're not talking about retail. We're talking about institutional investors. What's going to convince them? So that's kind of the lens you have to have. And so that's going to be a much more strict lens than people who are typically lean a little bit bullish on Tesla, because we give the benefit of the doubt to Elon, right? We assume what Elon is saying and doing and working on are true. But you have to remember there's this whole other side of the world that view Elon Musk as a con man, as a snake oil salesman, as someone who overpromises and underdelivers, or his timelines are never accurate, or he hasn't achieved anything that he set out to do. So there's a whole other world that believes that with all of their heart. You guys have seen them in the comments, right? Like, I try to block them every single day, but there's legions of them. There's unlimited amount of these people who are extremely bearish on Tesla, right? Gordon Johnson is the face of that. And so what I'm trying to say is that there's gonna be a catalyst. We don't know exactly which one. I have a list of potential catalysts that I think have a high chance of being, one of them being the one. And we're all, probably intuitively aware of this stuff, whether it could be the Cybercab unveil, whether it could be the announcement of a supervised permit application or approval or pilot city launch. It could be the FSD OEM licensing deal announcement, like their very first one. It could be, the Fed cutting interest rates, because interest rates play a huge factor in discount rates. And so for businesses that, where most of their value accrues from outer years, right? Interest rates has a huge effect on the present value of those cash flows. So, or it could be version 13, or it could be an unsupervised pilot launch, right? So there's a laundry list of these potential catalysts. We don't know exactly which one, but one of them is going to spark it. And that's kind of my general perspective. Sorry for the monologue.
No, it's exactly what we wanted you to ask. Jeff, what's your reaction to what you heard?
I like that, and I like the YouTube video you guys did too. So nice job on that. And the only thing I think to consider, just like in the Meta and Nvidia situations, it seemed like the market was late to that too. Like Nvidia literally, cranked up earnings pretty quickly, and its ascension has been, they put the earnings up. They've massively increased their earnings. So I think Tesla has definitely been in this holding pattern for a period of time, and it's definitely bumped up against this line a number of times, and it's going to need a catalyst to break through. And it's going to need something that's going to have some earnings power behind it. Again, I felt like the market was late on Nvidia. I mean, Nvidia was 100, and pre-split. I guess it was a $12 stock or so. I guess in October, November of 2022, and then it just took off in today's terms. When they really started, I think they had that quarter or two in the following year where they, were projecting $7 billion in, and they printed like 11 billion or something. It was unbelievable. So So the only difference I see in those stories are both Meta and Nvidia putting up, tremendous earnings. So, but I can see the market, wanting to get ahead of the Tesla story as well. Not, so it's one of those things. Either the market's going to be late, or they're going to try to get ahead of it a little bit. And the question is, are you close to the source data? Do you understand what's happening with the company? Do you follow the company, and you follow the data in the right way? And you hear, there are a couple of analysts now that are stepping up, and they're recognized. They're probably viewing the videos on X and YouTube from informed, retail analysts like with Justin, the work that Justin did, and others, and they're looking at this and they're like, yeah, actually, if you look at what Tesla's output is, like from an AI perspective, this is the thing I challenged in a recent video as well. I it's not clear to me. Tesla may actually be doing more from an AI perspective, and if you could quantify output in terms of control and movement in these vehicles through the world, there may be more AI output from Tesla than any other company claiming to be an AI company. So I like it. I think it's directionally correct, and it's one of those things of trying to predict how the market's going to respond.
Okay, let's dig in a little bit deeper here, because when there was a great repricing in 2018, 19, 20, that was associated with lots of money in the market. Interest rates were great, and it was associated with margin expectations in the next year. They're selling cars, high margins. In this case, you were saying, Justin, that you're expecting the great repricing to happen now. It's going to be big whales, you call it, institutionals. It won't just be the retail. So that's the first assumption. Is that true? And then secondly, wouldn't we need to see the interest rates to be cut? And then third, Jeff, you were just talking about how, the people will try to get ahead of the market, but are they getting ahead of the market when this is not proven revenue streams? Would they still do something like that when we're talking about big whales? You want to start first, Justin?
Yeah, I think the answer, is yes. I think one thing maybe that I lend a lot of credit to as well to these stories, whether it's NVIDIA or Tesla, is the power of narratives, right? When the narrative is compelling and convincing, it gives a lot of confidence to become overweight, right, and to have high conviction. So the narrative with NVIDIA is like undeniable, right? And when ChatGPT came out, that was the big spark for NVIDIA. I don't know if it was whether or not it was due to earnings alone, but when ChatGPT came out and everyone started trying to figure out, okay, wait, where is the value going to accrue in this space? People quickly landed on the data providers, the proprietary data, and chips, because GPUs. There's going to be a shit ton of GPUs that's needed. So the power of narratives is really maybe an interesting lens to think through as well. And I think when you run the numbers, and I think that there's Brad Gerstner has his firm is called Altimeter, and one of his principal analysts, I believe her name is Frida, she's on Twitter, posts a lot of her modeling around FSD, around Tesla and robotaxis. And these people are sophisticated, they get it. It's not really hard to model out. And when you do, and I know we talked about this, Herbert, on the interview, but when you do, what you'll quickly find is that, let's say, whenever you have a fleet, we don't know what year it is, but when you have a fleet of 1 million robotaxis, some of which are full-time, some of which are part-time robotaxis, but irrespective of that, when you have that, it's quite easy to arrive at an operating income of around, I think it was like $17 billion. And to put that in perspective, the trailing 12 months for Tesla is 8.1 billion. So you're talking about more than doubling for every 1 million robotaxis you have. So, you have to kind of like play a game of discounting, because that line of business is not worth zero, right? It would be unreasonable to say that it's not worth anything. Like maybe Gary Black has that, perspective, which is just completely wrong. It's just mathematically nonsensical. So there is value. It's just a matter of like, how is that value being determined, and what factors influence the drivers of that value? And so a big part of it, in my perspective, is that there's a huge discount rate being applied. Like when you model out, for example, startups, you give them something to the tune of like 30, 40% discount rates because a stable business might have something closer to like 10%, 12%. So there's this great, this huge variability, and you have to really think like, or at least from my perspective, you have to really think, well, what factors are going to enable this discount rate to reduce if that's indeed the case? Because it's either you believe that that robotaxis are worth nothing because it's not going to happen, or we don't know when it's going to happen, or according to RBC, it could happen as late as 2040, right? Just absurd. Or you start to see signals that indicate, holy smokes, we might be actually a little bit closer than the market thinks. Therefore, there's this kind of like arbitrage opportunity, and that arbitrage is so valuable that, of course, sophisticated investors are crunching the numbers and are keeping a close eye on this for sure, because the numbers are just so drastic, right? When you convert a business that makes $3,000 per unit sold of operating income, and instead you roll out a business that makes $30,000 of operating income for every unit, and that's recurring revenue, it completely changes the mathematics of Tesla and how it's valued. And that's just the reality. So the real question is just like, why is there a huge discount rate being applied, and what factors may result in the market beginning to discount those discount rates?
Okay.
That's my perspective.
Right. You called it a story stock, right? I didn't think you didn't use those words, but that's what you said. The narrative has to change. But for story stocks, are we on a risk-on environment? I just looked at this website, and it says that we are currently on a risk-on environment situation. And out of the last 60 days, about 29 days are risk-on, 13 days were risk-off, and the rest were kind of neutral. And yet money is flowing, and money's being thrown at Nvidia because they have earnings and they can show earnings. For a company like asset heavy Tesla, they need to have a risk on environment to be a story stock. They need to be able to show that interest rates have fallen. Neither of those have happened. And so if it hasn't happened, then it doesn't matter if it's a narrative changes, it's not ready for the story to change for Tesla. Is that a correct way to think of this?
Yeah, but remember, even Goldman Sachs expects rate cuts to begin in September, with the second one being in December. So we're talking about, if you zoom out a little bit, right? You're talking about the next 5 years. We're probably mid-cycle, let's call it, in this bull run. So we have another 3 to 5 years bull run ahead of us. Within that, we have a backdrop of interest rates being cut, right? It'll be trending downwards. And you have, at the same time, right, FSD being solved, you have Optimus production going live, and you have the Cybercab production going live. So, maybe if your perspective is, in like weeks to months, yeah, sure. We might be still like risk off, I don't know, but if your perspective is like, hey, look, I want to lock in something to the tune of like 20, 30, 40% IRR compounded over the next 5 years, then you have to think, okay, well, where are those, call it like a 2 or 3x going to come from over this time frame? Well, Tom Lee just put out a note saying that he believes S&P will trade at 15,000 by 2030. So just triangulate some of these pieces, right? Like if you're looking at the next 5 years, S&P going from, call it 5,500 to 15, you have rates cutting, you have Trump, who's going to win the presidency and help unlock the markets. You have AI being solved by Tesla, real world AI in the form of robotaxis and Optimus. So it's just like a phenomenal opportunity, right? If your hurdle rate, your personal hurdle rate for internal rate of return for your investments is something to the tune of like 20%, 30% over the next 5 years, right? Annualized. It's like Tesla's a really great bet. And I think that narrative is going to shift. Like as that's coming. Like I don't think the market's going to wait till last minute, in my opinion. But we'll see. I mean, like Jeff said, like we're really now talking about like, okay, trying to predict how the market's going to react. That's inherently like, difficult / impossible. But we can try to kind of sniff out like, okay, at what point would it make a lot of sense?
Okay, so I saw Jeff, you put your thumb up. Now, what's going to change the story? Is it the Cybercab unveil? Is it the first permit approval? Is it a licensing deal? Is it the interest rate needs to get cut first? What do you think?
I just
Yeah.
my thumbs up. I mean, I think when you apply the time horizon to the conversation of like, hey, where's a good place to tuck your money based on all the innovation that is coming from a company like Tesla, and you really start laying out what they're going to do. I agree with that premise. Like that, I mean, that's why I'm still, I believe that's myself. So yeah, I agree with that premise. It's more of like it's like when do you think it's going to flip, and like when do you think it's going to start breaking out? I mean, technically, the stock is in a place where it's at it could break out technically. Like those things are all being set up. Well, it's more of like what will the market react to? And again, I go back to Nvidia, and it had the Chat GPT moment. I think it was Q4 of 22. And the stock was, in today's terms, like $12 a share. I think it spiked up to 17. So call that, 30-40%. And then it kind of went back down to 14 or 15. So something on the order of 20-30% it got, for that narrative change. And that's a big move. But then it doubled, off of that $12 in the following, like the first half of the following year. And then it became an earnings story, and it became a narrative story, like together. And then, it's basically 10x'd from that point. So like, so you have to like think about, where's Tesla in that? And I think Tesla actually has a lot more actually happening than Nvidia. So it's more of a question of when, and again, trying to guess, is the market going to get ahead of this or not? I found the market to be kind of late again on Nvidia. I think Jensen Huang was up there screaming for years about data centers switching from CPU based to GPU based. The advances in AI coming, and how Nvidia would be enabler, and the market was just kind of like, yeah, tell me what's going on with gaming, and tell me what's going on with like the current data centers. It's bizarre. So but yeah, I agree. If like you have the conversation, if you have a time horizon conversation, and you're thinking our return, over a period of time, then yeah, for all the things we've talked about with Tesla, I don't know of another company that has a portfolio of products under development with the earnings power and capability that Tesla has today. I don't know of another. I can't name another company that has a portfolio of products with the kind of earnings power that what they're they're building. All they need is for one of those 3 or 4 things to hit, and it's unbelievable.
I saw this tweet maybe not too long ago, but I think it encapsulates so much of this. What they said was at $170, Tesla is a car company. At $300, Tesla is an AI company. And I think that that's such an important piece of the story, in my opinion, because when if you're talking about kind of like, if you put a gun to my head and you're like, okay, at what price, right, are we going to start to see the breakout? Well, if I'm looking at the charts, it's around 220, because as soon as we break that with confidence, right, when we break it through with strength and we retest it and then we bounce, that's going to be the beginning of the great repricing from a technical perspective, because we have so many gaps to the upside all the way to 290. And by the time we're back at 300, we're probably going to rip much higher, because the backdrop is going to be such that there's, interest rates are falling. You have the next gen production going out. You have, Cybercab production starting in a quarter or two. You have supervised or unsupervised pilot programs. So, I mean, there's going to be a lot of things that are going to change over the next 12 months. So yeah, time horizon is like critical, right? Like if you're someone who's like, and I tweet about this a lot, if you look at the market every single day, right? If you look at Tesla every single day, you're like, oh my God, the SPY and the Qs are up 1.5%, Tesla's down half a point, right? Like that's been happening all year. And you can get so exhausted and you can basically kind of like, lose sight of the ball, right? You miss the forest for the trees and get distracted or get exhausted or get fed up. And you're like, you know what, screw this stock. Like I'm gonna sell and buy an Nvidia. Um, I think that it's just like the wrong move. And I think you have to have kind of a little bit of an extended perspective and realize that we're in the ninth inning of this downturn. We're not like in inning number 4, right? We're at the end. I mean, we're right around the corner. So right now is not the time to, in my opinion, to get fidgety or discouraged. Right now is the time just to chill, wait, watch, learn, right? Stay on top of what's going on. Because at least when you're looking from the charts, 220. Gun to my head, it's going to be after 220. That's going to be the beginning of the great repricing. I think it happens this year.
Wow. Big statements. AJ, Omar, are you there? Yeah.
Yep.
Okay. Yeah. So we're talking about the great repricing. This is Justin. He was just talking about at some point, right? So we are all Tesla bulls here. We think that the market investors will recognize the different stories that Tesla has and start to recognize it. And others, of course, are still waiting for that earnings and they're waiting for the earnings growth to happen. What's your perspective on all of this?
Well, until rates start coming down, the stock's not going anywhere. So I don't look at the stock price. The stock price can stay flat for many years. You remember Ron Barron's CNBC interview in 2020 where he said, "We look at the business, not the stock price." For many years, the business has been growing. The stock price hasn't moved much. Now it's being repriced. It's a similar kind of situation here. With rates high, affordability becomes a concern. There isn't enough demand to cover all the supply on the market. People start doing incentives, start discounting vehicles. It becomes a tough environment to make money in. So Tesla's actually really a cash making machine, and they've got some really amazing products, but in this environment, that's just going to be a little bit muted. So once rates start coming down, that that helps with the core issue, right? And if you just look at, for example, the Fed's comments, any hawkish or dovish comments they make, you can usually see the impact on Tesla's price almost immediately. It's kind of interesting. So I think really before rates come down, the market doesn't really care because the core business is going to continue to be challenged. And a lot of the challenges don't seem to necessarily be getting better. In some cases, when you look at inventory levels, for example, especially after this, hack and everything, it's getting kind of more desperate. People are really doing a lot of incentives. So that's probably going to be challenged until rates start to come down. But if you were just focusing on that, you would miss the fact that there are incredible things happening in the business that are dramatically going to change the earnings profile in the future. So I think patient investors are really going to be rewarded here. I think over probably a 5-year time horizon, it'll outperform Nvidia and outperform the other Mag 7 stocks. I mean, what is Apple's plan to 10x the company? What is Google's plan, Facebook's plan to 10x the company? They don't really have one. They're all focused on sustaining the business. If you don't have a plan, you probably won't 10x the company. If you have a plan, then you might do it. And they've just got a really transformative product here. FSD 12.4, hands-free. You try it and it just takes you where you want. You don't have to touch anything. I think it's the first time people are really going to see what this sort of product of the future is, a car that you don't have to drive. So it's going to take time. We're not necessarily out of the woods yet. We're probably going to see rates start coming down in the back of this year or maybe even next year if things don't go well. I mean, i- it's just a little bit of a sticky situation with the way things are going economically. But yeah, I think really patient investors are going to be rewarded very well here. And those who look at the stock price every day, they're probably either going to chicken out and sell, or they'll sell after, a 50% gain or something and miss out on the 1,000% gain. So
Omar,
patience is a virtue here, definitely.
just to clarify, you're saying that it needs this, the rate cut has to happen. Some people are saying that the market is forward looking. They know that interest rates are coming anyways, and it might happen before the actual rate cut.
No, not going to happen.
Okay. AJ, sorry, we couldn't hear you earlier. Can you speak now?
Hi, now it works. Sorry, I had to restart the app. Yeah, just on sort of the trading outlook. The way I think about it is basically in four phases. You have like what I would call the sort of the early adopters, which is probably this group of people. Then the first phase. Then as you have earnings coming through, FSD earnings in a meaningful way, more people get aware of it, they get into the stock, similar as we have seen in NVIDIA Q4 2022. And then we have the next phase. The company keeps crushing estimates. More people stream in, and a lot of people who were highly skeptical with early earnings improvements, they give up and go into the stock after a significant rise. And then as the outlier stock keeps crushing, you have this phenomenon where then basically everybody and their grandmother also buys the stock, and you have a complete runaway effect. So this probably, if Tesla crushes it in the future, that's probably what's going to happen is. So I don't think there will be like an overnight 200% spike or whatever crazy. No, it's going to be you will see it at least 1 or 2 quarters ahead before it goes through the roof, because you will see how Tesla earnings go up all of a sudden, and you will see it not from the car business. You will see how, if Tesla doesn't split it out, you will see how the auto margin will all of a sudden spike for no good reason. There were no price increase, etc., and you will see it in that margin, and then obviously Tesla will split it out, and you will see the software business, and then the early buyers of the story, they will buy more Tesla, and then as Tesla keeps crushing, as I said, more people will wake up and flush into the stock. So ultimately, it really depends on earnings. It boils down to earnings, and the rate cuts, they will be useful, of course. They are, because discount rate goes down, but ultimately, what will really lift the stock to 300, 400, etc., is really when we see earnings come through. I stop here.
Well,
Alexander?
I mean, I was just going to say, I mean, I think we should get on the same page what we're talking about. I think when you're talking like full-fledged, like if you're talking about like the stock, going up 50 or 100%, I would contend that that could be narrative driven, even in this rate environment. I mean, if you look at it, was just last year, right? I think in May of 2023 that you had $150 some stock, and it basically touched $300 in July, and that was nothing. I mean, that was a supercharger announcement, which there was no financials behind that. There's no, there's nothing there that said there was no there, and just on narrative alone. So I guess it depends what we're talking about. When we say, a great repricing of the stock, I think we're referring to more of like, hey, this thing like really like getting uncorked and going up, 5-10x. But to say like Tesla can't go from, the 170, 180 area to 300, even this year. I mean, I'm never the one to predict the future, but there's no data out there that says it can't. Even with the if you look at the rates, even you look at the 10-year and the 5-year rates last year, they were basically in the 4.2 to 4.7 range, and that's where we're at right now. And the stock doubled. So, so it all depends what we're talking about. I agree. Like with the current rate environment, you're going to struggle. You're going to struggle to have the stock like totally break out, because like the auto industry itself is going to be under some amount of duress. But like, yeah, if you're talking about it doing some sort of like quick 50, 100% move, that could be on a narrative switch alone, I think. I mean, and last year showed that.
I just think that it needs, some sort of impetus to like begin this, or break the Elon, uh, lied narrative, and Tesla needs to start winning again. So, what is that? What is that winning formula? Is it just a narrative shift, or is it an actual earnings shift? Because if you listen to people like Gary Black, that's what you hear. Is you hear that we need margins to bottom. You need and that's the only thing that the Wall Street type will answer to. So if we listen to what Justin was saying, that these whales need to come into it, what will make them shift? I think it is an initial earnings win and a directional shift that can cause that chain reaction of positivity in the stock.
No, you just look at what happened last year. None of that happened. Earnings weren't increasing. The rates were 4.2 to 4.7, and the stock doubled. So I mean, I don't know. I mean, I don't think there was some whale phenomenon happening, back then.
Well, remember also that towards, I would say, summer of last year, during that.
Is that after the margin call spiral? It was trying to find its balance.
No, it was up at like 200 or something in like March of that year, and then it dipped all the way down to like high 150s, low 160s in May, and then we had the supercharger announcements. There was nothing really going on macro wise, and the stock almost touched three. I think it was in the 290s in July.
Well, you have to look at TLT. So the yields were dropping during that same time as well. So by the time Tesla,
Gotcha, great point. Yeah, I think it's the
Hey, Xander,
not knowing if
I'm not sure if you know, but Justin is actually speaking, and you might not be hearing him.
Oh yeah.
Well, I looked at the yields. They're still in a relative range of like where they are right now, like in the 3 to 4.7 range, which is what we're flirting with.
Yeah, from what I remember, when I was taking a look at this, it seemed like the 10-year was closer to 3.7, 3.8, but right now we're well over 4. So that's why I tracked the TLT as well, and we are breaking out in the TLT, which is basically inverse of the 10-year. So I think the backdrop is nice. I don't know if we'll need to wait for earnings to make a material difference, because at least when I'm looking at my model for robotaxis, I mean, we're really talking like, a fleet of probably like 100, 200,000 units to be able to generate around $4 billion in operating income. So you're really talking about like, there being like maybe 10 or 20 cities, right? That are fully operational, and we have hundreds of thousands of vehicles operational before we start to see the stock benefit from autonomy. I just don't think that that's the case. I think it'll be much sooner. I think it'll be kind of like earlier signals. To Jeff's point, you don't necessarily need financial sort of catalyst for the stock to run. The supercharger, the Hertz, all of that was nonsense. That was complete nonsense. There is no reason why the stock should have ran based on those two news events. So when I think about the drastic difference, right, in the earnings capability of Tesla pre versus post autonomy, like you can't ascribe zero value to autonomy. you can't ascribe zero value to robotaxis unless you believe it will never happen. But if you believe it will happen and within a reasonable time frame, and the ramp up period, over the next 5 years, maybe reasonable as well. It's really hard not to have a current valuation of at least $200 to $300 in today's price. So it's like, where is that value, and what's going to trigger that value to start to become accrued to the stock price? That's my perspective, and the reason why I should back up why I even came up with this concept of, or my own framework for the great repricing, was because in March and May of this year, right, we saw Elon green light and accelerate various autonomy-related initiatives, right? And there's a flurry of them all throughout April, FSD and robotaxi related. The real question is like, why now? What did he see, right? So that was the beginning kind of like piece of logic. And then you have to extend that logic out to, okay, he's talking about going into production for the Cybercab, sometime in 2025, maybe by the end of 2025. If you're not just going to produce, a Cybercab, right, with no steering wheel, and have it sit in a parking lot, right? You're going to have to deploy them. So he's working backwards from a given timeline, is what I'm saying. He's triangulating between the production, sort of like beginning for Cybercab, versus the progress in FSD. Now, maybe he's, guesstimating, right? And he might be, or maybe he's not. Because this is a big bet, and he knows that he's the boy who cried FSD. No one fucking believes Elon Musk anymore, right? Many shareholders don't even believe Elon Musk anymore. So he knows that he only has so many at-bats before his credibility is nuked. It already is terrible. It's down the drain as it relates to autonomy, because he's been touting this end of year nonsense since 2019, right? People are fed up. That's why we don't see it in the stock. But that's not going to be the case forever, right? There's going to be some catalyst that triggers it, where the confidence levels begin to tip over and tilt to the other side. And now the benefit of the doubt is given, the narrative shift is given, and funds feel more comfortable going overweight. Right now, keep in mind, Tesla is the most underweight stock, right, in big tech across across most funds and hedge funds, and it's the number one shorted stock by hedge funds as well in terms of volume. So that flip over is going to be driven by something, and I don't think that it's going to be earnings, because you need several hundreds of thousands of vehicles active on the road across dozens of cities, generating generating operating profit. And I just don't think the market waits for that. I think that's I don't think that.
So I want to ask Omar then, how confident are you that Tesla will have its first commercial offering of robotaxi this year or next year? Let's say 18 months from now. ARK Invest, right? They said 58% chance that it's going to happen this year, and another 38% the next year, and then almost infinitesimally smaller percentage chance that the first will happen later than 2 years from now. What is your confidence level, Omar?
I just think that I hear a lot of sort of desperation, we got to get the stock price back up somehow. It's not really something that I think people should stress about that much. I think everyone should just kind of curb their enthusiasm a little bit. There isn't going to be any robo taxis overnight. I mean, I think they're making incredible progress. There isn't necessarily going to be some great repricing, but I think when you just look at the business, it's pretty obvious that long term, this is a multi-trillion-dollar company. And you just look at the core auto business, they're really the only company in the world that can make EVs profitably. And the world is really marching towards EVs faster than ever, renewable faster than ever. You look at what's happening with the massive build out of AI data centers, the massive expansion related to electric vehicles, related to heat pumps. And I think the energy side of the business looks pretty promising from that perspective too. And then you look at what they're doing with FSD, they're the only company that's really training a global self-driving model that can drive in Europe, drive in China, drive in the United States. It can do things no other self-driving system can. What they're doing with Optimus, I think it's really going to be a massively massively cash flow producing business. And people have been a little bit misled, I think, by some of the things that have been going on, the product transition. There's so much negativity, but it's really not about people not liking Elon or he lied or any of these reasons that people cite when they're emotional is politics. It's pretty simple. High rates, auto supply returning to market, huge supply, incentives are offered, earnings come down. Earnings are declining. Now, earnings decline, stock price declines. At the same time, you can go take your cash, you can go put it in a savings account or some type of bond that gives you 5%. So people take their money out and they put it into those investments. In order for them to get their money out, the price has to fall. That's the basic market mechanism. So that's really just when you have earnings, when you have this type of situation, that's really going to sort of put a lid on it. Now, as rates start coming down, all those trends play out in reverse. So now affordability isn't as much of a concern. Now people are willing to take on bigger loans, so they add in more options. That's improving the profitability. That's improving on the margins on the car without you doing anything, right? Your business is still the same. Then at the same time, FSD is getting better. It's now able to do drives hands-free without any intervention. That's also bringing up sales of the vehicle. So now earnings start increasing. So as earnings are increasing, also rates are coming down. You're now getting less on your savings account, on your bonds, and more capital's coming into the stock market just as the earnings are growing. And then you get a situation where people are now saying, oh, okay, this thing's shooting up. I need to jump back in. And you now see the business sort of revalued. You know, you can have these sort of narrative shifts like superchargers or whatever, but that's ultimately not going to be sustained unless you have the earnings growth there. And I think it'll become clear what the true earnings power of the business is as we move into next year when the rates start coming down and the AI starts turning the corner, launching internationally. This business really has tremendous earnings power. And I think it's really kind of been masked over. But if you filter out the noise and you just look at the underlying business, they're just as differentiated as ever. I think on the cost perspective, it's really not appreciated because you see all these EVs on the market and you think, oh, everybody has an EV. But nobody's been able to figure out how to actually sell it and make money on it. And Tesla's been able to continue to do that even through this downturn. So, really, it all comes down to just that moment where monetary policy reverses. And I think then they're going to start getting credit for a lot of the things they've been doing in the background for years.
Yeah, thanks, Omar. AJ, you had your hand up.
Oh, Omar, are you exhausted? You sound tired.
Maybe a little.
Okay, Sat.
Yeah, so I came in midway, but one thing I can say is that typically Tesla's stock is pretty bad most of the time, and then you have those inflections where it triples, 10x. Like, I got stock in 2012, beginning of 2012. It took like almost 2 years before it tripled, and then it was from 2014 to 2019. It was pretty flat, but during that time, there was volume production of Model S, introduction of X, and volume production of X, introduction of 3, volume production for that, Y, and then it 10x, right? It's like 3 vehicles basically before it did any significant jump or even come close to what Kathy Wood had said before. So they were basically mocking her during that time. And so we were in another period here, where transition period. You have the Cybertruck coming out, volume production, whatever is going to be unveiled on 8.8, and plus the 3 that's covered, that's going to be unveiled at some point. So I don't know how long it takes, but it's usually majority of the years. If you look at statistically, it's bad, right? It's not going anywhere, so people get frustrated with it. There's people that talked to in 2014 that just sold out after 3x. For the people who held on, you benefited, years later. So I just think there's always that inflection point that's going to really rise, and it could be some trivial thing that not even connected to earnings or whatnot. But it takes a while for majority of the years is pretty bad. It's flat or negative, and then you have these couple years or 3 or 4 years period in the last 10 years that's a phenomenal job, and that's why you don't see it when in the long chart. You don't see it, but when in the midst of it, you feel like, oh, it's all bad. But a lot of stuff's coming out. We don't know what inflection, and the FSD and the components of the software is different today. It's not just making cars anymore. So that potential, nobody can really figure out what that market exactly is going to be. So I look forward to a bigger jump later on, and I don't think it's going to take necessarily the same kind of cycle, like 6 years or 7 years. So I just think that, emotionally speaking, majority of the time it's going to be bad. So, but if you look at what's happening and what they're unveiling, it's a lot more than what other companies are doing.
Thanks, Sat.
I don't know if you guys saw Ron Barron's letter, but he wrote, in previous instances where Tesla shares have underperformed during a discrete period, they've shortly afterwards reflected the strong growth of the underlying business, and the stock has appreciated considerably. And that's always been my experience too. When the stock shot up in 2019, 2020, because they reached profitability, you saw that moment of success. What you didn't see is them launching the supercharger network in 2012 and 2013, years and years before that happened, laying the groundwork for the infrastructure, which they would invest billions in to create a situation where an EV could be your main car that you could take a road trip with. You don't see all the work they did on FSD hardware and chips and batteries and drivetrains and ramping the Model 3 and new production lines and the tent production line, all the hard work they had to do to get there, that the stock wouldn't have been able to run, earnings wouldn't have been able to grow without that. And similarly today, they're doing a ton of work. I mean, back last time when the stock was running, there was a lot of hype about 4680 cells and 0 cells actually shipping. Now I've got a car with the 4680 structural pack in my garage. Thousands of customers are driving them around, but the hype is at a much more subdued level. So they're really doing a lot of things right now. I mean, starting to make their own batteries, improving the inference hardware, massively building out their training compute, doubling it every quarter like crazy, that are going to create a lot of earnings power into the future. And my experience with Tesla is when these repricing events do tend to happen, and they do tend to happen because, Elon, he doesn't do PR, he doesn't do marketing, he doesn't really care if most people don't get it. I think maybe he thinks it actually creates kind of an advantageous situation for them. They can probably do stock grants and stuff like that at a lower price. But then when that repricing happens, it tends to happen so quickly that if you blink, you'll miss it.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.